In today's video, I am going to talk about this that is really bothering me. The most overrated metric in investing, revenue growth. It tells you nothing about quality, value, or profits. I disagree with this statement. I am going to show you why. I am going to show you why in information and statistics and numbers, why this is not true, why I find more people are talking about this in 2024, and it's really starting to bug me. And in the meantime, I'm going to show you some characteristics on how to find and identify 10x stocks. Welcome to Common Sense Investing. My name is Cameron. Let's go find a great penny stock. Okay, so disclaimer first, I am not a financial advisor. I am definitely not your financial advisor. I do not give buy, sell, or hold alerts on this channel. It's just my opinion. I like talking about stocks. I am one average retail investor just like you. And I have been trying to be good this year. I haven't been covering any scam stocks. I haven't been covering any hot garbage stocks. I've been staying away from most companies that I think are absolute wastes of time and money. However, sometimes there's things that bother me so much I have to talk about it. And one of those things has been in 2024, where it seems like everybody has forgotten about revenue growth. I feel like revenue growth is getting undervalued. And when I go online on social media, I find people talking about how revenue growth is overvalued, just like this post here, and I've blocked out the names because I don't want to embarrass anybody. That's not the point. I just need to talk about what I need to talk about here. Social media influencers are saying things like this, and people are just assuming it's true. Another poster disagrees with me and says that revenue growth gets overrated because the assumption is that revenue growth always goes straight to the bottom line, which isn't true. Now, I understand if this was a problem back during COVID when there was a lot of new investors into the stock market, but right now in 2024, if there's still investors, if there's still people trading microcap stocks that aren't reading the earnings, that don't realize that earnings are important and don't go read the financial statements to go see how much of that revenue is actually being turned into profits, if people aren't doing that, then I can't help you anymore. I've stopped trying to educate these people. I just find it concerning that this person is basically saying that revenue growth is overrated because of a whole bunch of terrible stocks and not some of the best stocks. Why not use those examples? The common comment I see on social media in 2024 is right here. Again, this person thinks that I somehow missed the point. It's going over my head that revenue growth is overrated. Why? This person says that revenue growth of 20% with EPS growth of 40%, or revenue growth of 40% but EPS growth of only 10%. Which one would you want? Investors know that EPS growth is what drives share price higher. And when I was looking at a way to disprove this, it was bothering me so much that revenue growth is overrated. How am I going to prove that's not true? Of course, who comes to the rescue? Ryan Telford. Big shout out to Ryan Telford. All these numbers that I'm going to look at are from this fine gentleman and great investor. You can go find him on Twitter or X. He's also on Seeking Alpha. I will link to everything Ryan Telford down below in the pinned comments of my video. Ryan here says that of nearly half the 10x stocks in 10 years, the main driver was sales growth. There's been a lot of chatter lately on how sales growth is not a useful factor. However, the data says otherwise. Thank you, Ryan. Let's go look at this data a little bit closer. Here is a list of 25 stocks. Ryan has already gone ahead and highlighted in yellow everything with a percentage of 50% or higher. All of these stocks are 10x stocks or greater in the past 10 years. So to help you understand this table and these columns, we have multiple expansion. So if we have a company that makes $1 of revenue, multiple expansion is basically the valuation of the company, how much for that $1 of revenue that people are willing to pay, or how much more are they willing to pay. Profit margin expansion is if the company is making that $1 of revenue, how much profit do they get from that $1 of revenue, and how much is that increasing over the 10 years. And then finally, sales growth. If a company makes $1 of revenue on year one, how much has that grown over the 10-year period, right? Percentage of revenue growth. The overrated metric we're looking at today. And when I bring in this, which was from the social media post, might be a little bit hard to read, revenue growth of 20% with EPS growth of 40%. This is what people are saying they want in a stock these days. How many of these 25 companies are realistically going to get that? 2. We have two companies, Advanced Micro Devices, B Semiconductor Industries, that have, what do we have here? 20% or less, 18% revenue growth, 19% revenue growth, with this profit margin expansion of over 40%. In fact, revenue growth is so massively overrated. If we take out all the stocks that have revenue growth less than 20%, we still have 23 out of 25 stocks. If we take out all the stocks that have 25% or less revenue, that still leaves us with 21 out of 25 stocks. In fact, we can move this number up to 35%. If you're only looking at 35% plus revenue growth stocks, you're going to capture 21 out of 25 of these 10-bagger stocks. 84% of them had 35% or more revenue growth. So again, I have to ask the question, is revenue growth overrated? Why are people saying this on social media? Now, just for fun, let's reset and see how many of these companies had earnings per share or profit margin expansion growth of 10% or so. 4 companies, or around 16% of the stocks, had profit margin expansion percentage of about 12% or lower, so pretty low. Now remember, it was 4, or about 16% of the stocks, that had revenue growth of less than 25%. So really low revenue growth, you're likely not going to find a 10-bagger. Really low profit margin expansion percentage, and you're likely not going to find a 10-bagger. Those are the two outliers: low revenue growth, low earnings growth. Easy, right? Why we would say that earnings growth is all important and revenue growth is overrated doesn't make a lot of sense to me. If we reset the palette here a little bit, going back to the beginning, and we focus back on this original comment comparing these two stocks, these two magical stocks, one with higher earnings per share growth and one with higher revenue growth, and which one would you prefer? I have to say here that the average of all the stocks on this table has a revenue growth, sales growth of about 45%, profit growth of about 29%, and a valuation growth of about 23%. This makes sense to me. This is what we're looking for. This is beautiful. Look at NVIDIA up there. Sales growth, 48% for NVIDIA. Profit margin expansion, 27%. Multiple expansion, 24%. NVIDIA is basically right in these averages, perfectly in the average for all of these stocks, and no wonder up 20,000% for NVIDIA. Why is this so hard to understand? Am I crazy? Why are people saying this? Why is this getting me so worked up, riled up? I'm pissed off right now, right? Where are these companies going to grow their earnings from? Magic? Are they just going to fire everybody, not have any staff? Are they just going to cut all their suppliers or stop paying their suppliers year after year after year and just reduce their expenses to grow their earnings without getting revenue growth? It's just not realistic. It's not how companies are run, right? You get revenue growth. In behind the revenue growth with a good company, you get earnings growth. Those companies get recognized as good companies, good stocks, and then their valuation improves. Just for fun, Ryan Telford provided us with list number 2. There's a whole nother table of more 10x stocks here, right? And just the same thing as before, even more pronounced. All of these stocks are 1,000% returns in 10 years. Look at the profit margin on some of these. Half of these stocks, just about half of these stocks, have profit margin expansion less than 12%, 12% or less, 2%, 8%, 3%, 12%. You know what none of them have? Low revenue growth. Again, 42%, 33%, 86%, 35%. Go down the list. To get a 10x stock, you need a company that is increasing their revenues. Are earnings important? Of course they are. It's all together. It all forms what is the company, the balance sheet, the share structure, all of those other things we need to go research. However, to say that revenue growth is overrated when you look at tables like this is just absolutely shocking to me. So final thoughts from me is don't forget about revenue growth. Yes, 2024 has been a very good year for microcap stocks, and two of those reasons has been the multiple expansions and the earnings expansions. Why has that been happening? Because during 2022, stocks were absolutely crushed. A lot of stocks out there were cheap. Multiples were really, really low, as well as after COVID, post-COVID, expenses started coming down, right? As shipping normalized, as labor normalized, companies were able to go out there and renegotiate, look at their expenses, renegotiate prices, and bring down their expenses. So we're heading into a more normal situation, but right now it hasn't been normal. A lot of these companies have gone up in share price thanks to their multiples getting corrected back to a normal valuation, and because they've been able to reduce their expenses, improving their earnings. However, it's not normal. It's not a normal environment. In the future, what you're going to see is probably not a lot of this, earnings growth of 40% over 20% revenue growth, because it's just not reasonable. Yeah, you're going to get some of this, right? But this, again, are two extremes. What were the averages? 45% revenue growth, 29% earnings growth, and then 23% multiple expansion. If you could find stocks that come close to those numbers, you're probably going to have a winner. One is not more overrated than the other. They're all important. Thank you for listening. You've been watching Common Sense Investing. My name is Cameron. I appreciate your time. I hope to see you again soon.